So, in today's episode, what we're going to talk about is a little bit different from the previous episodes, where I'm going to go into, statements or things that I hear about, from others, from other people. I hear about it from influencers, from financial experts, and that's basically the bullish thesis on Bitcoin. What is that bullish thesis? And a lot of people say, and there's a lot of, information out there, but a lot of people will say, hey, you're not bullish enough on Bitcoin. And then you think to yourself, really, am I not bullish enough? How much Bitcoin should I actually hold, right? And bullish enough compared to what, right? Is it compared to the loudest guy on Twitter, compared to some influencer screaming to the moon, or compared to reality? Right. So, welcome back to another episode of the Bitcoin Ecosystem Podcast. I'm glad you're here today because, again, I want to unpack something I hear about all of the time, which is you're not bullish enough on Bitcoin. I'm going to explore what that really means when people say that. We'll talk about that against the backdrop of macro cycles, money printing, inflation, currency debasement. And then I'll tell you why I think Bitcoin really plays a unique role in all of this. So, this is what we're going to talk about in today's episode. Again, the reason why I do all of this is that we are at 3% adoption. 3% adoption is almost like nothing. And if we're at 3% adoption, that almost kind of tells you where we are in terms of the general level of education about cryptocurrencies, blockchain, Bitcoin, really any of this. So we're entering a new financial paradigm, and I think there should be a lot more emphasis in this, and that's the reason why I'm doing that. Also because I'm really super passionate about this topic. But so this is a tweet from Adam Back, right? And you can Google who Adam Back is, but then this was basically in February of this year where he posts a tweet. And again, this is not unlike tweets that you hear from others, or things that you hear from others, which is you are not bullish enough on Bitcoin. And you ask yourself, well, why are people so extremely bullish about Bitcoin, right? So if we start with the basics, and again, I am starting with the basics here because again, my channel is supposed to be for everyone. So let's start with the basics about what does it mean to be bullish and what does it mean to be bearish, right? So in any market, you have stocks, you have commodities, you have Bitcoin, anything. You either take the stance of being bullish or you take the stance of being bearish. And so what does that mean? So if you're bullish, you expect that the underlying price of an asset to go up over time. When you're bearish, it means that you expect that the underlying price of an asset to go down over time. And depending on which way you lean, you position yourself accordingly, right? So you might buy, you might sell, you might hold, you might hedge, you might be, involved in options trading, all of those types of things. But that's like basically market 101, right? And we all know this. So when someone says you're not bullish enough, basically what they're not saying is, hey, you think the Bitcoin price will go down. They're not saying that. What they're saying is, you're not hyping Bitcoin to the same level I am. And you kind of think to yourself, well, you pause and go, hold on. Are we measuring bullishness by excitement or by evidence? Right. So let's dive into this bullish thesis of Bitcoin. And that requires rewinding to 2008 and 2009. So the great financial crisis. Now, this is just one chart of probably many charts I could show you about the great financial crisis. But if you remember that time, the financial system was in absolute chaos, right? So we had a top around October of 2007, and we saw the bottom happen by March of 2009, right? So we had banking bailouts, we had housing collapse, and we had central banks around the world again injecting unprecedented amounts of liquidity into the system to really keep everything together, to stop all of this from falling apart. And as you would remember in some of my previous episodes, we talked about this, but we talked about what happened in January of 2009. This was the context. The 2008 financial crisis actually gave birth to Bitcoin. It was those conditions, those first principles, those baseline environmental parameters. If you think about where Bitcoin was born in the backdrop of these types of conditions. So in this context, in January 2009, Satoshi Nakamoto mined the Genesis block, the first Genesis block, basically launched the Bitcoin blockchain and forever the Bitcoin blockchain, right? So there was no big flashy launch, no IPO, no Super Bowl ad, no influencers hyping it up on TikTok. It was the Bitcoin launch was quiet, right? It was almost like underground. And that's important because Bitcoin didn't emerge in a vacuum. It was basically, again, as I said, it was a response to the system that had shown itself to be completely fragile. And this is really where it gets interesting, right? So this is where it gets interesting. 2008 and 2009 kickstarted many different things. Not only the Bitcoin blockchain, but it started to kickstart cycles that started to line up a little bit too well. And there's a lot of research, there's a lot of people talking about this. It could be that this correlation only is valid for a certain period of time. It could be that in today's cycle that this correlation is no longer valid. Who knows? That's yet to be seen. But when you zoom out and you look at the macroeconomic picture or the macro picture, you notice cycles starting to align themselves, right? And really after this 2008, 2009 period of time, and these being 4-year cycles specifically. So you have the Bitcoin halving cycle. Again, we talked about in its previous episodes, it happens every 4 years. You have the US presidential election cycle, of course, happening every 4 years. You have the US debt refinancing cycle. Again, some of the largest debts in the world and some of the most consequential, again, aligning itself every 4 years. And then what you see here on this chart is that you have the ISM or the manufacturing cycle, right? It's almost eerie how they all line up. And again, these cycles aren't just trivia, they're the rhythm of two things and the confluence of those two things, which is politics and money. So every 4 years, there's some big fiscal or monetary decision making moment. And all of those decisions ripple through the economy and ripple into Bitcoin, right? So it's important to understand A, the context of how Bitcoin got started, and B, how the Bitcoin blockchain, where it kicked off, also kicked off a few different parallel cycles that all started to coincide in kind of these 4-year, cycles or 4-year mark points. So that's very interesting, right? So again, hold that thought, understand that, and we're going to get back to that in a bit. So when we talk about debt, so when a government needs to refinance its debt, there are basically two levers that they can go to. One, raise more money through taxes, right? Or number two, print the difference, print money. So if you're a company and you have more debt than revenue, you either sell more goods and services, right? You frantically go out there and sell, sell, sell. Otherwise, if you have more debt than revenue, for most people, corporations, people, anyone, you go bankrupt, right? Or you have to declare bankruptcy. Governments, of course, have a cheat code. They own the printing press. They can print their way out of catastrophe, print their way out, right? Defaulting is not an option. It's catastrophic in many ways, right? It signals instability to the world because it spikes borrowing costs and it sends shockwaves to the market. So printing money, that's always been the go-to tool. It always has been and it always will be. But printing money has a price. And this is the price, right? $1 in 1913, $1 in 1913 had the same buying power as $26 in 2020. Printing money has a price, and you can see these charts. This is kind of, you can see $1 in 1913, I think 30 Hershey chocolate bars in 1913, $26.14 versus one McDonald's coffee in 2020 is $1, right? So you can see all of the major points where the US dollar becomes the world's current reserve currency, quantitative easing during the financial crisis. You can see all of the major points in a chart like this, and it's kind of really fascinating in order to deep dive into. But this is where I think people start, you stop listening, and they kind of tune out. And I want you to stick in there, keep listening, because this is the most important part of all this. Because they think, yeah, sure, printing money causes inflation. This is like, economics 101. I get it. But it's more than that, right? And it's really far more than that. It's actually far more insidious than that, right? Inflation, in simple terms, is where the price of goods and services goes up, but your wages don't keep pace. And you can see this, right? In 30 years, purchasing power of the US dollar has decreased by 53%, but the S&P 500 return has been 972%. So what gives, right? Your purchasing power drops. And we feel that at the grocery store, at the gas pump, everywhere. There are so many YouTube videos these days, and so much being written these days about how people are feeling poorer and poorer. But that's because we are getting poorer and poorer if we are not protecting ourselves from this insidious level of inflation plus currency debasement, which is done because governments can print money. But inflation is just the visible symptom, right? The deeper disease is currency debasement. And that is the erosion of value in money itself. And here's the thing, is that erosion has a speed, and we call that the hurdle rate. And so here you can see 11%. This is what is commonly being referred to as the hurdle rate. So in the US, that hurdle rate right now is about 11%. Depending on where you are in the world, this hurdle rate could be much, much more than 11%. So please do a little bit of research and you'll find your own hurdle rate. But how do we get to 11%? It is a sum of not only inflation. So a lot of people think, well, if I get a raise above inflation, I'm doing just fine. This is where a lot of people get it wrong. Or if my portfolio beats inflation, I'm, getting a return more than 3 or 4%, I'm also winning, right? But if the hurdle rate is 11%, you can beat 4% inflation all day long and still be falling extremely behind. So the 11% is a summation of 8% annualized currency debasement. This is what we've seen year over year, plus 3% inflation. So it gets you to an 11% hurdle rate, meaning unless your income or investments are growing faster than 11% a year, you are actually losing ground, right? And so this is where even if you feel like you're doing okay, life feels a bit harder, but everything is slightly out of reach. That's currency debasement quietly at work. And you've probably seen this in the course of your lifetime. Remember the time when, you were a teenager, you're starting with, your first jobs, your first paychecks. Those seem to go a lot, the money you made back then went a lot longer and a lot further than where it does today, where you think, hey, I need to earn like 2 or 3 times my paycheck in order to be doing fine. And this is currency debasement quietly at work. It is the most insidious thing in the market. So how do you beat this 11% hurdle rate? And there are only 2 ways to beat it. And this is really the premise of the Bitcoin bullish thesis and why people say that you're not bullish enough. It's not about making money. It's about essentially retaining money, or retaining the position, or retaining where you are today, and beating that 11% hurdle rate so that you're not getting poorer over time. So Bitcoin in this case, in the bullish thesis, is a way in order to conserve, essentially. So right now, historically, there are only two major investment vehicles that have outperformed that hurdle rate consistently year over year. Number one, it's the NASDAQ, right? And the NASDAQ, of course, it's a collection of very high growth tech companies. The tech narrative has been here to stay for the 2010s. It's still here to stay, even today. And if you can argue that there's even an acceleration of the tech or AI narrative now that you've seen with the proliferation of like large language models and ChatGPT, OpenAI, all of that sort of thing. So you have the NASDAQ, that's beating the 11% hurdle rate. The second thing, of course, you can look at it from a CAGR perspective. And again, this is not financial advice at all, but Bitcoin, as a scarce digital asset that we all know, that is also beating the 11% hurdle rate. So the S&P 500, you would ask, where's that in the mix? Like, there's a lot of people that are invested in the S&P 500, which is great, but it's around that 11% annualized mark, which is, it would be great if you think about it, but it's not, because at the end of the day, that 11, if you're just making that 11% hurdle mark every year, you're just treading water. But if you want to gain ground, well, then you actually have to do better than that 11% hurdle rate. So this is why we, and a lot of people say you're not bullish enough. It's not bullish from the perspective of, hey, let's try to make tons and tons of money. It's bullish you're not bullish enough for a variety of other reasons that go far deeper into the way that world economies actually work. Right. So we're not saying that Bitcoin is going to go to 500K by next Tuesday. But the math of the existing systems make alternatives really not just that. They're just not that attractive, right? So this is not financial advice. It's just a reality of the confluence of debt cycles, money printing, and what happens to your purchasing power over time. And so again, you can go into this into far more depth than I am going to cover this in today's video. You can see also where Bitcoin's yearly returns are. And again, it doesn't mean the whole picture is rosy. You have extremely large drawdowns that happen every so often, too, right? So minus 58% in 2014, minus 73% in 2018, minus 65% in 2022, very recently, right? This is important to understand. Look, I discovered this entire picture fairly recently myself, right? And I missed this entire picture for many years. So I can only imagine how many people still don't see this. This is the reason why I share it, not because I'm trying to hype Bitcoin, but to inform you about what does it really mean in order to get ahead these days? What is the 11% hurdle rate? What is the confluence of inflation plus currency debasement, right? So all of that to say, am I bullish on Bitcoin? Absolutely. Doesn't mean you have to be bullish on Bitcoin, but I'm bullish in Bitcoin in a way that's grounded in macroeconomics, not let's go to the moon memes or when Lambo. Of course, we'd all love to drive a Lamborghini, right? One of the really great podcast videos that I've seen about this topic, which I highly encourage you, if you really are very new into all of this, please watch this. It's the Diary of a CEO podcast. Really, really love Diary of a CEO podcast. But in this episode, and you can Google it, it has crypto expert Raoul Pal on this video. And the way that he talks about it, and the way that he talks about, what you can do in order to position yourself, his views of how Bitcoin and AI will transform the global economy, basically his views on what's going to happen between now and roughly 2030, they're very interesting. These are very interesting perspectives to hear about. So from my perspective, Bitcoin is one of the few assets that is positioned outside of the system, the TradFi or the traditional finance system, that is preserving wealth, right? And that alone makes it worth really, understanding it deeply. And if someone says I'm not bullish enough, right, I'll take that as a compliment because my bullishness is built on something very real. So, with that, thanks for listening to this episode of the Bitcoin Ecosystem Podcast. If you found this helpful, please share it with a friend who still thinks beating inflation is enough. And do your own research into this topic about currency debasement and hurdle rate, because I think that's the most important thing that I can probably share with you in all of my podcasts is this understanding of the insidiousness of money printing and what currency debasement is all about. So beyond just inflation. Inflation is something that everyone hears about. Currency debasement is something that almost no one talks about. So until next time, stay curious, my friends, stay informed, keep exploring the Bitcoin ecosystem. And until next time, let's get after it.